UK's economic crisis. The UK is currently experiencing an unseen economic turmoil. Inflation is on the rise, Brexit is creating political instability, and the nation's pension funds are close to collapse. In this video, we will look at the factors that led UK's economy to the lowest point in decades. So stick around to understand the full picture. Let's start with inflation. Inflation in the UK hit a 6-year high in 2018, reaching an annual rate of 2.7%. This means that the cost of living is increasing and the value of money is decreasing. The ongoing Brexit negotiations are causing uncertainty in the UK economy, leading to drops in the stock market and a weaker pound sterling. Many pension funds in the UK are also facing difficulties, with some estimating that they need to increase their assets by 40% just to maintain current levels of payouts. This is putting pressure on both individuals and businesses. Overall, the current economic landscape in the UK is uncertain and challenging. It will be important for both the government and citizens to closely monitor and adapt to these issues in the coming months and years. The UK is currently facing an economic mess. Last week, the UK's currency reached its historic lowest level low as it lost 5% of its value in a single day. The crash was so powerful that it ate almost half of the country's pension savings, only to be saved at the last moment. Due to the conflict in Eastern Europe, the whole of Europe was facing the brunt of the energy crisis. Inflation rose to a historic level of 10%. In the meantime, the newly formed government of Liz Truss introduced policies that shaped the devastating economic chaos. The first one is the energy price guarantee to discount the unit price charged to customers. Basically, the government's aim was to support households from the effects of the ever-increasing energy bills. This policy was supposed to save thousands of pounds by limiting their energy costs to around £2,500. Similar to other support schemes, there was no need to apply for the scheme, as it was automatically applied after October 2022. For the policy to function, UK government needed £100 billion to compensate for the policy for the first year alone, since the UK Treasury can't afford the expenses, so the policy will be primarily financed by government-issued bonds, which again exposes everyone to the one thing that most dislike, if not everyone, i.e. inflation. So, what is the other major policy change that led to concerning economic woes? It's the very historic tax cuts. The policy of historic tax cuts was put in place on 23rd September by the new Finance Minister of the UK, Kwasi Kwarteng. Within a bold and expansionary policy, the government hoped for economic progress undermining its effect on the state's financial health. The pound was trading at its lowest against the dollar on the 24th of September, when the finance minister reaffirmed his policy on top, giving hints to increase the tax cuts. Though the finance minister was confident with his decisions, he did not explain as how the plan will work. Soon, the bonds market collapsed, followed by a downturn in the mortgage market, pushing the pension funds on the verge of bankruptcy. Though the policy was aimed to provide relief to the individuals prone to inflation, it only ended up supporting the more affluent sections, as later research proved, since both policies were going to increase inflation, creating more problems for the economy than it could bear, so the international market confidence in the pound dropped dramatically. All the very developments finally led to the very popular crash of the pound. Investors had already questioned the very unpopular policies of the new government. Investors started selling their Great British pounds, which again resulted in a mass devaluation of the pound as it was being sold for other better performing currencies. One of the most stable currencies in the world soon started to be traded at the historic low valuation of $1.03 before gaining a bit of momentum in the week. After the pound crash, certain financial institutions had neither hoped nor planned for such a huge decline in the value of the pound. One of which was pension funds. The Bank of England has confirmed that pension funds came close to collapsing during the market meltdown in March. The central bank's governor, Andrew Bailey, said that pension funds had been under enormous strain as the pandemic caused a sharp drop in stock prices. However, he stressed that the pension system had ultimately held up remarkably well under the pressure. The confirmation from the Bank of England will add to concerns about the long-term viability of pension schemes. With markets still volatile and interest rates at historic lows, many people are worried that their retirement savings will not be enough to see them through their golden years. However, Bailey said that the pension system was resilient and would continue to provide a safety net for retirees. The current awful state of UK's economy cannot be fully explained without the Brexit effect. Brexit was a major blow to the UK economy, coming at a time when the country was already struggling with high levels of debt and weak growth. The main problem was that the Brexit uncertainty led to a sharp fall in investment, as businesses became reluctant to invest in an uncertain economic environment. This had a knock-on effect on growth and employment, leading to a rise in unemployment and a decrease in GDP. In addition, Brexit also led to a drop in the value of the pound, which made imports more expensive and pushed up inflation. As a result, many households found themselves worse off after Brexit, and the UK economy continues to suffer as a result of the decision to leave the EU. Conclusion: the UK economy is currently in a precarious state, thanks mainly to the new policies in place, Brexit, and the recent pandemic. The country was already struggling with high levels of debt and weak growth before these events, and both have made the situation worse. As a result, many households are finding themselves worse off, and the economy is struggling to recover. In the long term, the UK will need to find a way to boost investment and growth in order to get back on track. Feel free to like, share, and subscribe to our channel if you found the video worth your time. Thanks for watching.